Hello, good morning. Welcome to today's trade ideas and signal. So without delaying ourselves, we go right into it. Like we said, starting from 4 hour for our daily something and try to see what we can capitalize on. Okay. In our previous video, I made mention of what daily is doing and with the kind of reaction we are having from this level and the type of consolidation we are experiencing currently in the market. So and how we've gotten this high infiltrated. And on 4 hour, we did see how it was closed above. And at the same time, we are in our last something, it was this particular leg that I talked about. And I gave us reasons to buy at least. Maybe we can buy from within the leg. And we did have some kind of let's try and do the analysis to see the review of what really happened, and we declared that to be a strong low, and where we are expecting market to protect, and this level to be our weak high, where we are anticipating some kind of reaction from to be our weak high, where we are expecting liquidity to be taken. Now, if we reverse back to the video I did earlier before that level, we talked about this particular leg, picking this leg to be our point of entry sometimes back. And as we can see, we have that level being, we have a lot of things going on that level. But we've moved past that. And on 15 minutes, we did try to take some trade from this level, from within this leg here. But we are anticipating some kind of movement. And I talked about internal liquidity plus external liquidity in our previous video. So having this, okay, I'm seeing some things here now. So having this leg within this something, you know, having this type of reaction was an indication for me to do what? To close the trade going forward. But if we still did our normal something very well, at least we would have banked 1 to 3 in the market, the proper 1 to 3 trades. So was banked from from that level. Even though personally I do set and forget of one to five, but we've seen this type of reaction in the market is an indication for a close because of the wicks that is being created there. And number 1 to 3 into something is enough. And if you study the market actually during the day, you would have seen a proper reversal pattern from this level because we have a total super above this leg and we have a break of this structure here. Then when we are trending, when we reverse from this level and we are going up, we can see another level from this place. And so we can see that, okay, there is proper liquidity, internal liquidity was taken from this level, sending price lower in the market. So having this type of level, having this type of reaction in the market is an indication that, okay, price is doing what? Price is ready to reverse. And we have this level also. We have this shift and, we have this thing coming down. So moving on from that, yesterday I didn't do any analysis because, we were within this leg and because we've talked about it in the past and we are watching out for the kind of reaction to games from the place. But if we redo our analysis from the kind of break that we've gotten here, this level will has automatically been on to our strong guy because of the infiltration of this strong low in the marketplace. So here automatically turns to our trend change because here is the level that sent the trend up. But for us to break below this low and close below it is an indication that, okay, trend has changed within the market. So having this type of trend change in the market, we automatically know that, okay, yeah becomes our stronger. And as you can see, the creation of internal structure within all these levels, and yeah automatically becomes our dealing range. And this level becomes our weak low, which will be our external liquidity that will be anticipating markets to take going downward. And as you can see, we are within this leg now. And if we are to study this leg appropriately using our something and here becoming our dealing range, we can see the proper something of 50% here. These are 50% of something. And yesterday we have a proper mitigation of the 50% because we have this level standing right at the 50% of the whole stuff. And as we can see, the internal structure within this level has already mitigated 50% of the something. And this level coming back into this internal structure already give us what our expectation of mitigation of 50%. So the only thing we are anticipating is a break below this week low and continue to move lower. So if we are going to be picking any trades today, it will be from within this level. And I talked about internal liquidity yesterday. I mean, in our previous video, these are external liquidities that we are anticipating in the market, either this high or this low. But we have a mechanism that always indicates which level will be protected and which level we should be expecting external liquidity from. And from within that leg, we can now begin to, and that will signal our bias and our order flow in the market. And as you can see, the order flow, the trend has changed from uptrend to downtrend with the breaking of this low here. So we have our structure break from this level, and that automatically indicates uh, what is it called? A change of trend change for us. So this is our dealing level now. As you can see from the 50%. So automatically here is going to be our strong high on a minor level because we can deal with it from, as you can see, it's just wicks that has been thrown, and there is proper mitigation of this level moving downward like this. So we have some levels here, and if we check daily, there's another block below here that we can be anticipating that price is going to get to and give us some kind of proper mitigation of the level. And if we look at this leg here also, that is standing above it, we can, let's just term that as a PDA level. But me looking at it, we have this level here because there is proper mitigation of for this level going forward. Then we can have, because let's assume that this fair value gap that we have on daily want to hold, we shouldn't have a closure within the level. It should have always just given us weak, which is also an indication that we might be coming down into this other block here to regard that. But on a macro level, which is a fundamental level, we can see this is a battle between Europe and euro and dollar. So this is about to be between euro and dollar, and we have 1.17 as the current price of using dollar to buy euro at the current market. So there is a reason why price is being held within this range, and coming from this level going forward, we are expecting so many, higher prices in the market. But it's a battle of banks, and at the same time, they wouldn't want that to be so. Price has to be held in range, and for whatever reason, we are stuck here at least for now. So, but we just try to be picking what we can from the level going forward. So my own advice, because of the stock, because of the way we are stuck within this level, is to utilize the point of liquidity. And that's the only way I think we can just get through this level so that at least we will not be taking so many aggressive trades that we out our account. So moving on from that level, we can just say, okay, we have external liquidity, we have internal liquidity. And before we begin to take trades, so many of the aggressive trade, that I'm giving these days, I'm kind of putting a clause on it that you should be able to do what? You should look for you should look for internal liquidity before you enter the trade, before you take the trade anyway. Because of what? Because we are on an higher time frame. On higher time frame, we are within range. We are within range, and anything can happen within range. The high and low of the range will be taken here and there, and we might be expecting that this level might hold price and still send price higher, and might not even give us any kind of reaction, and just give price access to go through it without any form of reaction from the level, because it's the tussle between banks. Now, having this level here and here being our strong minor strong high, and we are anticipating this level to be taken, and this level still be our weak low, which we are expecting and anticipating some kind of external liquidity from. So, based on what I was saying now, before you take any trades from within the level, try and see if there is an internal liquidity. We can just flow with an internal liquidity within the market. So when we have external liquidity like this and we drop some analysis, what we are trying to look for is the point where we can have internal liquidity before price going down. So using that idea, we automatically know that, okay, so from within this level, we are anticipating some kind of reaction. And that's exactly what we have here on 5 minutes yesterday. So there is an internal liquidity being taken from within this level. And as you can see, we have another reaction from the level we sent price lower. The same thing happened here. There is an internal liquidity that was taken, and we have some kind of reaction. And you know what? Price did come down and continue to move in that regard. So that is that about. So looking for internal liquidity before you bank on your trade. So that, but continue moving forward from with our episode. I'll be giving us some kind of levels where we can be anticipating some internal liquidity from. So it is from within that internal liquidity that we're going to be buying and selling. So we have so many levels within this market here now. So and we are anticipating news. We are anticipating news today. So anything can happen. Anything can happen, but we'll try and do it. So from within this level, where can we spot? We have this session range coming back into this particular level. We try to see it through 15 minutes or 1 hour. We see this is a minor strong low, which was taken within this level. And we can see a break of this structure here, this level, which happens to be a normal trend change in the market as well. So this is, there's a level we can call this TC trend change, because we have break of the structure within this level going forward. So market coming down to break below this low is an indication of trend change for us as well. So, and we are at levels. What sponsor this break of structure is within this leg. We have this leg, but the whole mother of it is from this up here. So it is from within this level that we're going to try and see, and here automatically still be our current minor weak low in the market. Minor weak low that we'll be expecting, and if we are to go on a minor structure and try to see where there is so we have this level here, and we have this internal reverse internal structure. We have another level here. This is another internal structure, but we didn't have proper navigation of the level. So we can be anticipating price coming into this level. That's our internal structure, no matter. And we have a lot of high impact news today. CPI is coming. We have jobless claims, and all these things are happening during during New York. We have some, so we have some high impact news of Euro also coming during New York, the first 15 minutes of New York. So, to me, I'm still leaning toward sell within the markets. So, but at least the liquidity above Asian high might be taken before we go into the low. But looking at the 50% of the something, there is proper mitigation of all these levels coming down. And the only place, because even if we look through this 1 hour fair value gap that we have here, it has been mitigated because this leg mitigated. And the only open place is this internal structure. Here, we are just throwing wicks and anything can happen from the level. But if we try to see through 15 minutes, I don't want to overanalyze. This is the only level. This level, this leg here, from within this leg, we have internal structure, but even this internal structure has been properly mitigated. And this level also, this we are okay. I'm seeing a breaker block here. There's a breaker block within this leg. This is a breaker block. Even though this internal structure, there is proper mitigation of all these levels, honestly speaking. There is proper mitigation of all these levels. So what I would just advise is for us to be on the lookout for internal liquidity. We will just we'll allow the price to create because even the price action we are experiencing during this New York Open is worse. I mean, this London Open, we can see how it's throwing wicks. So we just have to stay clear. We don't have to force trade anyway. You can see the kind of reaction it's creating. Look at all these levels here. What is this? So it's just creating unnecessary wick, taking high and lows of each candle. So, but we'll be on the lookout. But personally, I'm still holding because I was able to enter a trade from this level yesterday. So selling down, I'll still be holding for the level anyway. But if I'm expecting any reaction, it will be from this breaker block because from this breaker block, yeah. So, but we have this internal. So the only thing that we can be anticipating is price taking, you know, we have this level here, taking the internal liquidity above Asian range into this level or taking the internal liquidity above this level going into our internal structure that mitigates breaker block. But nonetheless, we can just pick a trade from this level. I'll be a short. That's if peradventure putting it above here is still okay. But at the same time, this is the breaker block. But nonetheless, perfect 15 pips, something for us. I'm not expecting price to go above that breaker block. And that will give us 75 pips return in the market. So that will give us a perfect 1 to 5. So if price did go higher, I'll be expecting something from this leg here. So it's a risky one anyway. It's a risky trade, but at the same time, anything can happen. And as you can see, we can see this 4 hour here, see the kind of something that is creating. So we can have the manipulation into that level and try to sell lower from it. So you can reduce your own to 1 to 3 because anything can happen within the something, and that will be 45 pips. So that's 1 to 3. 1 to 3 will give us this level. But personally, I always like to use 1 to 5. So at least that should be on. Let's keep it at 415 because it's a risky trade and we are just trying to capitalize on whatever opportunity that has been given to us. So let's put it there. That will be all. At least there is proper mitigation of all these levels coming down. There's proper mitigation of the levels. So anything can happen. News is coming and news is coming. We have a lot of news coming and anything can happen from the level. So at least that'll be all for now. Thank you. Have a profitable day. So this 1 hour is inside bar, and this one also is kind of still inside, but we try and see where it's leaning toward. This would have been the perfect level to set price lower, but the kind of reaction it's creating, we can't trust it. But nonetheless, let's just put our trade in and end it there. At least that will be all for now. Thank you. Have a profitable day.